Welcome to the Wiser Wealth Management Roundtable. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith, and guiding you to financial freedom, my co-hosts Brad and Matthews are out today. I am going to play for you the interview I had with Robert Swarthout last week. Robert is our advisory board member and is a great friend of mine who has really helped me grow this company in the direction that we are all benefiting from, especially the client base. But Robert has a hobby, probably more than a hobby. He has a lot of his own money invested in digital currency, and I think has a great insights on what's happening in the digital currency world, and I'd like to share that with you. Here's my interview with Robert. All right, this week I have Robert Swarthout with us. Hey, Robert.
Good morning.
You are our regular digital currency guru. I need to give you a name tag with that. Put on your put on your shirt when you come in the office.
Okay.
Today we're going to talk about digital currencies, kind of an update of where we were from the last time we talked earlier in the year. I should note that today is July 1st. Almost a holiday weekend when we're recording this. So Bitcoin being around 33,000 now could be 60,000 by the time our listeners hear this, or it could be 10,000 by the time listeners hear this. So some of our references might be moved a little bit.
A little time sensitive. Yeah.
But let's go ahead and get started. I guess we just kind of update from where we last talked in February 9th of this year.
Yep. So we talked on the morning of February the 9th. Bitcoin was at a little over 46,000 per Bitcoin, and today is at 33,600. So roughly a 33% drawdown there or so.
But there was a lot of water underneath that bridge.
Oh, yes. Time moves very quickly in the digital asset space. So
yes, we hit an all-time high of 68,000.
Yeah, high 60s, something like that.
Yeah.
And then it's kind of come down, jumped back up almost to 60, I believe, and then kind of fell all the way down to 30. And then it's kind of crept back up to 40 and fallen back down to 33.
Right.
So it's, keep your head on a swivel with this stuff because it happens quickly. And then another one, Ethereum, back on the 9th of February, it was 1751 per Ether. And today it's at 2133. It had run up much higher than that. It is also drawn back down. XRP was at 46 cents a piece, and it is at 66 cents. It also had run up.
Yeah.
Quite high. It was at $1.75, I think, something like that. And then it's come back down. That one, again, we'll get to later, is in the middle of a bit of an SEC loss. It's got a little black cloud hanging over it at this point. But the total market cap back on February the 9th of all crypto combined was 1.36 trillion. Today's 1.39. So we're basically in the same spot we were roughly 5 months ago. But there was the market cap had gone up to 2.3 trillion. Now it's back down. So 900 billion up and back.
A lot of wealth created, a lot of wealth taken.
Yeah, a lot of paper profits there.
And I think I should add before we continue too that if you have no idea what we're talking about right now, there's a great podcast about this. Go back. There's two of them.
Yeah.
But go back to the first one with Robert. You'll see that in our history.
I think it was last August of 2020.
And you can listen. It was a conversation with you, me, and Brad, I believe.
Correct.
About what are digital currencies, what's the purpose of digital currencies. Mm-hmm. I've met some people over the summer just in, vacation golf, and you get paired up with them. And that's like, they find out you're in finance. And the second question out of their mouth is, I don't understand this digital stuff. Do you do that? Yeah. Well, not really. Yeah. But
I'm getting
yes and no.
I'm getting less questions myself the last couple of weeks or month because the market's been down. But when the market's going crazy, everyone is got their favorite coin you should be buying.
Yeah. On one of my golf trips with my son to watch him play in his tournaments, I pulled over to a gas station in the middle of nowhere, and in neon, like bright neon lights, was Bitcoin sold here. I was like,
Bitcoin
wow,
ATM.
We've reached the peak.
Yeah, those are probably some pretty good businesses themselves.
Yes,
so.
I would think so. Let's get started with some changes to Bitcoin. This is one of the things I read in the Wall Street Journal, and maybe you can explain it better than them. So Bitcoin is going through an upgrade. It's called a Taproot upgrade.
Yeah, they just kind of named it that. I wouldn't say there's anything special to the name itself. This is the first time in I think like 5 years, maybe 6 years, that the Bitcoin community has agreed on something at like 90% agreement level. I mean, it's like super majority here. So the Taproot upgrade has been approved, and it goes into effect, they think, sometime in November. It will improve the transaction privacy and efficiency. My take on that is there's only so much privacy in this stuff anyways. The IRS is getting good at tracking this stuff down if you're in the United States here. So it's
evidently, if you use Bitcoin as part of your ransom demand,
yes,
it can be tracked somewhat as well.
yes. So privacy, I don't know. It is what it is there, but the efficiency is probably more important to this upgrade, and trying to make Bitcoin be more than just what some people want it to be, a store of value. Like, you can't transact in it when it costs, or it gets backed up and takes hours to get a transaction done. So
right. It
will be interesting to kind of see what the efficiency means there. Like, is it cutting in half wait times, or is it, I think there's, a lot of unknowns there. But I think the biggest piece of the update itself is bringing smart contracts to the Bitcoin blockchain. Currently, it is purely just a payments blockchain. Like, I'm sending you Bitcoin, you're sending me Bitcoin type thing. Ethereum kind of took the DeFi, decentralized finance, smart contract thing and ran with it many years ago. And that is by far the biggest platform for it currently. Bitcoin probably wants some of that. They want, because there's starting to be some corporate or institutional interest in smart contracts. They're playing with it. Nothing, obviously, not many dollars are going through it at this point.
What is a smart contract?
A smart contract is basically a contract in code form, computer code form, that executes when something happens. It's kind of like self-enforcing. So it may be that we have an outside data source that says when Casey shoots 5 over par, I owe him $100. Well, we could put that into code, and it's just automatically going to happen once you do that, and we can prove that it happened.
Could you like tie it to my GIJN number? Now my handicap's in the cloud.
Yeah, absolutely. That's a bit of.
How about if a CEO hits X amount level of a stock price, then bonus is paid out of X.
Absolutely. So it just kind of like takes the human component out of some stuff, makes it enforceable, and makes contracts where other contracts can talk to each other too. So if one contract triggers, it could trigger another one, and kind of like a cascading effect is even some very basic example.
So now Bitcoin can participate in that.
That's their hope. Ethereum has had high transaction fees as well. Bitcoin kind of is along that same thing. Maybe this efficiency helps improve that, but it's, I don't know if it's too late to the party for them, or if they're just on time, but we will see. Maybe in 6 months, or actually probably not in 6 months. We won't be able to tell. Maybe this time next year, maybe have some visibility to that, be my guess.
Do you think there's any talk on the efficiency of Bitcoin, like the mining process and how much energy it takes, which is a great segue into
our friend Elon.
Yes, Elon, who bought 1.5 billion of.
Well, Tesla did.
Or Tesla,
yes.
of
Bitcoin.
Of Bitcoin, only to say that no, you can't pay me in Bitcoin anymore because so the energy is using too much energy to produce.
So Tesla, to kind of recap there, Tesla bought 1.5 billion back, I believe it was in November, late last year.
Drove the price up.
They had bought it, and a couple weeks later they announced it, and then it drove it up like immediately, like a 12 or 17% spike or something like that. So good return on the investment, I guess. And they were holding that on their balance sheet. Around the same time, Tesla's like, we will start accepting Bitcoin to buy cars. And I'm not sure if anyone bought a car with Bitcoin. It's kind of one of those things. It's like, if you believe it's an asset that's going up, why are you going to spend it to buy a depreciating asset? It's like a double whammy there.
Right.
And then Elon tweets and goes back and forth. And then like all of a sudden, it's like one day he woke up and realized that Bitcoin was maybe not the most efficient network from how much energy it was using. Whether he did his homework up front or not, I don't know. And then he's like, we can't accept it anymore to buy cars. I'm like, okay, great. No one probably was anyways.
Right.
And then Tesla announced that they had sold a 10% of their Bitcoin holdings to test liquidity. Like, okay, I guess that worked for you. I don't know. The price dropped when they heard that Tesla was selling because everyone's, very emotionally invested in this stuff.
Right.
Fast forward a couple more weeks or a month or so, and then Elon's like saying that at some point in the future, Tesla will accept it again as payment once the Bitcoin network is at least 50% powered by renewable energy, which good luck calculating that because it's done all over the world. And
right.
I don't know. It's the emotions of a billionaire tweeting are affecting Bitcoin way too much. Maybe good or bad. I mean, it's showing how young this industry is.
Well,
from a good standpoint.
Not only how young it is, but also how unregulated it is. That
100% unregulated.
You can have someone like him. We used to call him whales, right?
Yeah.
You have a whale who's has a name. His name's Elon, the whale.
Yeah.
And he literally tweets out, "We're, buying this," and then he can tweet out, "We're selling this," after he's already sold it.
Right. He can front run it,
and it's perfectly legal to do that right now.
He's been doing this with Bitcoin. He's also been doing it, in my opinion, with Doge as well. So DOGE, and
there's a whole SNL.
There's a whole and the price had run up from literally the beginning of the year. It was sub-penny per Doge,
right?
And then the week that he was on SNL, was it early June, I think, something like that. The price had run up to like 71 cents. That's an incredible return during the year, and people thinking he was going to basically spin the whole SNL skit talking about Doge, which there's no way NBC was going to do that.
Right.
And then it's only been downhill since then. And I didn't look up to see what it was this morning. My guess is like low 30 cents. But
what's interesting though is that currency or that
digital asset
was essentially created with no purpose.
It was created as a joke over a weekend. I think it was a spin-off of Bitcoin or Litecoin, basically the same type of network. It has incredible inflationary powers to it. 5 billion tokens are created a year. Over half the supply is held by a couple different wallets that started it. It's a bad day for everybody waiting to happen. Right. If those single or those really big holders decide that they want to liquidate.
Yeah. So let's come back to Elon.
Okay.
But I think that's a great segue to talk about Mark Cuban.
Yes. Another billionaire within crypto.
Another billionaire who suddenly really wants the government to step in and take over crypto.
Yeah, he wasn't so excited about regulation up until, I would say, 2-3 weeks ago. And then something called a rug pull happened. So it's an exit scam, much like the Doge with a bunch of people holding a large amount or even majority. He had invested in this asset called Titan, Titan, and it went from $60 per Titan to slightly above zero within a 24-hour period. And it is flatlined there. It's last time I looked. I don't know the exact details on everything that happened here, but a lot of times a rug pull is these teams that set these tokens up are very anonymous, or they claim to be, here's my LinkedIn profile, but maybe that's not necessarily them. Most of the time they're outside the U.S., so there's even less reach for the government to kind of do anything. And you're buying these through some exchange that may not even be in the U.S. or likely not in the U.S. And it's just
but the point is that someone got to him and said, "Hey, you should invest in this." He did, and when the money went in, they do a rug pull, which means, this is not going to work. We're going to
they sell. They have so much quantity to sell that they just push the price to zero.
Yeah.
And it loses confidence in the network, and it's basically a dead asset at that point.
How many dead assets do you think are out there?
Dead, I would probably phrase it as like a zombie, right? And being there's 10,000 cryptos, I would half of them probably.
Interesting.
Or they're up and coming, they don't have life yet. So it's just kind of hard to tell the difference besides just looking at a chart. And there's such little liquidity in these things. I have no idea how much money was flowing through the Titan exchange, but it could have been that $10 million would have moved it, or $1 million would have moved it, or it could have been 50 million. Mark did come out after it and said he admits to not doing his homework on this one up front as much as he would have normally done, which is easy to say now, and it honestly probably means nothing to him anyways. I'm sure he did not invest anything substantial for him in it.
Right.
So it was more of a lottery ticket.
Which is, I think, is how a lot of people are viewing digital assets right now. So they're looking at these portfolios and they're buying different things. We have a person here that we met that it's like, I love trading these things, and it's the same reaction you get out of gambling from people who like to go gamble.
Yeah.
So there's a lot of that out there, and it's interesting because I think a year ago we would have said, oh yeah, well, Bitcoin's probably more store value, and that like that's your new gold,
right?
And that's the place where you put savings and long-term stuff,
right?
And I think the ride we just went on is kind of proof that maybe we don't look at Bitcoin as a stored value. You don't go there for your safety, at least if you live in the U.S. and you have U.S. dollar available to you.
Exactly. If
you're in a third world country and there's 2,000% inflation, maybe that's a different story.
Right. I mean, that's happened in Iran and I think Colombia, 2019, something like that. So here's another great segue. So El Salvador, right? Back in June, they passed a law to make, they named Bitcoin as an option for legal tender in their country. Most people probably don't know. They were already using the U.S. dollar as their country's currency. They couldn't control it, obviously, because the U.S. Fed does. But so they weren't all. There wasn't like this crazy inflation happening because they had their own currency going on and they were just printing it like crazy. Although the U.S. seems to be as well. So they said Bitcoin's a thing. It can be accepted as tender. It can't be required, but it is an option. If somebody comes in to pay into your little store to buy something, you have to accept it if that's what they want to pay with. Made a lot of news, especially for Bitcoin proponents. It was like validation for them. Some of the math just doesn't like add up for me on this. So I looked up the average person in El Salvador makes $7,000 per year. So wow. I don't know if that's third world or second world. It's not a high income. Roughly $19 a day. Well, an average Bitcoin transaction over the last week, I just went and looked, cost $5 to $10.
Wow.
So, okay, there's no way that somebody's that makes $7,000 a year should be using a network that costs even $5. Take the low end number there. Like, it's just not fair to them.
So what would the advantage of the country doing that then? Because it's not like Bitcoin is its own entity and there's some Bitcoin rep going to the country saying, hey, if you take our currency, we'll pay you X amount.
Yeah, this is pure speculation. I wonder if there's part of the government's being paid by
who?
By
a miner?
A miner and or a Bitcoin whale. That's a possibility. Maybe it's small. I don't know. I do know that they are also... the El Salvador government is willing to custody your Bitcoin for you, and you would use an app to interact with it. So maybe you're not paying that $5, but they control your crypto. So it'd be like them holding you US dollars. You have to trust them in the same way.
Right.
So maybe that's good because it brings more people into a digital economy that maybe they struggle with doing. Here in the U.S., everything is digital to us. We don't really pay with physical fiat anymore.
Right.
Especially after COVID. So it's not that big of a change for us, but for them, it could be. And I mean, I don't know. Is the El Salvador government trustworthy enough to say that they're not going to run away with Bitcoin someday, your Bitcoin? Because you're not going to get it back if that's the case. I don't know. There's a lot of questions there for me. Time will tell whether this was a rug pull by a government,
right?
or if this was purely a trying to do good by their citizens. So.
Well, speaking to that point, you look at China. China has their own digital currency now, which is not a digital asset like Bitcoin is. It's controlled by them.
Yeah, it's
a.
They're calling it the ECNY, so the yuan. Much like I was just saying, digital dollar. It's a digital yuan.
Right.
They have many people in their countryside that probably don't have access to a great financial system because they're, up and coming in that sense. Their cities obviously are very good, but there's, also there's privacy concerns. If I hand you a $20 bill, no one knows that happened besides the two of us.
Right.
Now
they can track it.
They can track everything and they can figure out what you're spending on. And they, China is very much a surveillance state in the sense that they could also require that the shop that you're buying in basically give them a digital receipt so they know what you bought with that.
Right.
All of a sudden it goes from being relatively private to absolutely not private.
Literally the government knows everything that you're doing.
Or, they could tie it into their social...
With no personal rights there.
Right. I mean, and the point I'm about to make, I think really illustrates it. So they have this whole system where people can say whether you're a good citizen or not. I forget what they call that system. It's like a social score of sorts. Mm-hmm. They could decide that your social score goes low because you're, saying something bad or whatever they deem not good, and they could shut your bank account out, or they could make it where they could take money out of your account because they control the accounts at the point. And there's maybe that's a little out there, but like definitely in the realm of possibility.
Well, based on what we've seen out of Hong Kong, I would say that
yes,
I would say that it's very much in the realm of possibility. No doubt about that.
It'll be interesting to kind of see how that evolves for them. They're definitely the country that's leading the way here. Unfortunately, the U.S., I think, has had an opportunity to kind of do that. They did it with the internet. They led the way with the internet. They've chosen not to do that so far with central bank digital currency or CBDC. You probably see more and more in the news.
To your point earlier, why do we need that here? We have credit cards. We have...
Domestically, I don't think we need it all that much. At least I don't see tons of use cases. I mean, everything's digital for us anyways.
Right.
There's some of the back-end settling systems I think could use it, from my understanding, but maybe the retail-facing stuff is not all that important. With these CBDCs, you're starting to see not just being talked about as a singular thing within a country. And again, there's 56 countries that are researching, testing, and implementing a CBDC. So roughly, a quarter of the world, 20%, something like that.
Right.
But it's starting to split into a commercial CBDC and a retail CBDC. So retail being, you and I would interact with it. We have an account at the Fed, which we do not currently have. We have an account with, Bank of America or Choose Your Bank that turns around and has an account at the Fed. So it's almost like taking a layer away. I think that politicians like the idea, or some of them seem to like the idea of a CBDC retail. Because I think when they were trying to mail checks last summer for all this stimulus, if everyone had an account at the Fed with a CBDC, they could have just literally changed the ledger entry for your money, and all your money's there instantly.
Right.
So there's some, if you agree that stimulus was good, a CBDC would have been helpful in that case. But again, it takes the privacy away that we have with dollars if we use the physical, which, again, I haven't used one in forever, besides tipping.
Yeah.
I don't know. I think there's more use cases domestically within the U.S. for a commercial CBDC than there is a retail one. Fast forward a year. This stuff's moving so quickly that I think, my opinion, might change. A year ago, it was very rare that you would even hear countries talking about CBDCs. Maybe because of COVID and everything else was not top of mind there. But today it is all over the news, it seems like, pretty consistently.
It's interesting to see that. It's not like we're going to... I haven't heard anybody really talking about like a one world currency. I don't know that every country would ever agree on having a currency that they couldn't control.
Correct. And, I don't think there's ever going to be... CBDCs are not going to solve I need to move money from... the euro to the dollar. Maybe in a few cases you might see banks be willing to swap with each other. But I see another asset coming in and kind of trying to be that, or multiple assets for that matter, because countries, you'd have to agree upon what the rate is, and it's always moving, and it's hard to agree within a country, let alone get countries to agree. The European Union is a great example. They always seem to be like upset about money in some way over there.
But in the CBDCs, you have less risk of bad actors inflating prices, because it's all controlled by the government. So it'd be a more stable environment.
Yep. Where,
going back to Elon, we have these wild tweets, possibly for his very own benefit. We don't know.
Yeah. I think when you're saying controlled by the central banks, I think you're probably talking about the commercial CBDC in that case. And my guess is that's going to be permissioned, meaning I cannot go get an account on that CBDC. I cannot trade that particular asset. It is almost like doesn't exist in some sense to me as a citizen. I would have to be probably a bank charter or something to kind of get access to that.
Gotcha.
And obviously they're not going to be like trying to manipulate, or if they do, they're going to be, regulated away or something.
Right.
The retail one, I think, is purely just almost like a checkbook registry. You have so much money in your account, it moves up and down. There's no trading of that particular asset. Would be my guess, the way that one at least works domestically for us. So
true. So let's backtrack a second. Let's talk a little bit about Ripple. When you were talking about Ripple earlier, you said it had a kind of a black cloud over it, even though the price has increased. I'm assuming the price has gone up because there's been some light shined on on the SEC versus Ripple. And just to refresh our listeners' memory, basically Ripple was accused of not being a digital asset, but being a security. They're saying it's a security.
Yeah. Small correction here.
You go ahead.
So
You're the expert.
XRP is the digital asset. Ripple is the company.
Okay, gotcha. So XRP was being accused
of being a security. Yes, the SEC made the blanket statement that all XRP is a security. It's crazy, but that's what they alleged in their lawsuit, among many other things. They said that Ripple, company,
they're U.S. based, they can do this.
Correct.
Where Bitcoin wouldn't have this risk because
there's no company or organization. There's a Bitcoin foundation, I think, of sorts that they could try to sue, but it's so decentralized and there's no like main actor to sue there. Ethereum, you kind of get in some gray waters there. The Ethereum Foundation's there. They sold it to begin with so they could raise money so they could have this foundation. Like it is maybe an easier lawsuit there than certainly a Bitcoin one. I don't think you will ever see a Bitcoin lawsuit.
But XRP,
the asset
clear-cut case.
Partially because Ripple holds so much, in my opinion. They hold roughly, I think, 45% of the supply, and it's slowly been coming down. Because of the way they sold it. So they sold it to these other entities, and the SEC alleges that it was an investment contract. They're saying, "Oh, we'll sell this to you." You know, whatever the contract says, you don't. We can't see because it's private. But we're going to try to go build this software to make this stuff valuable over time. What we just sold you might be worth more. Investment contract. I mean, this literally goes back to. It's been fascinating to learn this for me personally. Like, in 1950s, the Supreme Court had a case that they ended up ruling on. They called the Howey test. The Howey test is a 4-pronged test that basically was designed to help regulators decide if something is a security or not. Because orange groves north of Orlando and Howey in the hills, some guy was selling trees that were not producing yet. With the idea that someday those trees will produce oranges and they'll be worth more. That acts like a security, much more like a commodity of, we're just selling oranges because they're growing on these trees.
Right.
So that test has never been updated, 1950s for 70 years. And now they're trying to literally use that same test to decide if some computer code running on the internet is a security. I don't know. I mean, the SEC... It seems like they're trying to do their job. Maybe they're not doing it, in my opinion, the best. They're trying to maybe, I don't know. There's probably all sorts of politics behind the scenes here that we can't really see. And, go listen to the second podcast we did. We talked more about the case there and kind of how it came about. But if you're interested, the case seems to be progressing. They're still in discovery. They recently got a 60-day extension. The SEC asked for a 60-day extension of discovery, which is a little frustrating as someone that holds XRP that wants to see this kind of be resolved, whatever it may be.
Right.
Because they've had 2 years leading up to this that Ripple was voluntarily giving them information. Then they needed 60 more days. Like you couldn't get your stuff together in 2 years. In 2 years, so you need 60 more days. It was a little frustrating, but we're just along for the ride at this point. And as the discovery happens, the judge does seem fair, but the SEC's case seems to get weaker and weaker, and they almost seem to be a bit of digging their own grave here with some of the stuff they've been saying. They'll say something, and then the next week they'll basically try to change it effectively by saying, "Oh, we meant this over here." It's just kind of like at some point the judge is going to catch on, and she seems pretty sharp, so I imagine that'll happen pretty swiftly. So if the case went all the way to summary judgment, that would be Q1 of next year is kind of what the current projection is. But 90% of cases are settled at the end of discovery. So maybe September, October, my understanding of watching some YouTube lawyers talk about this stuff, which were pretty insightful actually, that, by the end of discovery, you kind of know how this thing's going to shake out. Right. Everyone's kind of got their cards out on the table and you kind of, there's not much arguing left. A lot of the arguing happens in discovery. So
just going back and looking at digital currencies, what do you think what have we learned since February? Because
there's no store value currently in this market.
There's no store value, right? I think one of the things that I saw was the same reaction to Bitcoin trading that you see in stock trading, whether that be ETFs, mutual funds, just the market in general, and that we go to all-time highs and people start piling in. Mm-hmm. We get down, because you look at the ETF flows, it's all flowing out of Bitcoin. Other currencies or assets have positive flows,
sure,
but Bitcoin has negative flows right now,
mm-hmm.
and it's because everyday Joe, more than likely,
mm-hmm.
got in at the top. Market falls, doesn't like the losses, starts selling, and they'll probably buy back again.
Yep,
at the top because they're doing this on their emotions.
Yep.
You're either a short-term trader where you're trading this thing by the day, hour,
mm-hmm.
or you believe in the concept that you don't know exactly what's here, but something could be here, and so you're going to put a little money in it each month. My recommendation is never more than 1% to 2% of your total liquid assets,
mm-hmm.
right?
Yep.
Because if it goes to 100,000, you made a nice little return.
Mm-hmm.
If it goes to zero,
right,
you only lose maybe 1% of your total return for that year.
I agree that the human psychology piece of this is definitely playing in. If you rewind a year, so March of 2020 when the market was just down, Bitcoin obviously was way down as well. It was down at like 3,500 or something like that.
Right.
So there's also some people saying part of the sell-off had to do with people that held a year. They got to their long-term capital gains treatment, then they sold because they did a 10x.
Yeah, true.
At least maybe a 20x, some of them. So I think, there's probably all that's probably true at some level.
But on that track, you had on this timeline, you had large companies putting tremendous amount of money into Bitcoin.
No more than 5 companies. I can't name more than 5.
A lot of money, though.
I mean, kinda. I mean, Bitcoin was worth over $1 trillion, and they were putting in. Tesla put $1.5 billion in.
We had the insurance company.
$300 million. I mean, if you could get to $2.5 million with all these purchases, I'd be shocked.
Yeah.
Fine, I'll round up to 5.
That's a good point. That's a
billion.
good point.
That is nothing. I mean,
compared to the market share.
The narrative was, oh my gosh, every company, even the flower shop down the street was buying Bitcoin to put on their balance sheet.
That's right.
Definitely not
That's
happening.
Right.
So I think, I think a lot of companies are waiting. The regulation is not clear. Taxation in many countries is not clear.
Right.
The U.S. is kind of like treats it like a hard asset, like a stock.
Sure.
In that
You
sense.
just mentioned earlier that in some countries, what companies can hold on their balance sheets regulated. Germany is one of those. Yeah,
Germany, as of today, July the 1st, 4,000 financial institutions in Germany, I'm not quite sure what that definition exactly is, but are now allowed to hold up to 20% of, I think, their assets in digital currencies or digital assets.
Yeah. On the balance sheet.
On their balance sheet. It was very restricted before that, so now it went into effect today. That's the narrative right now. Oh my gosh, here comes all the, Germany's a rich country, here comes all the money. I'm like, we'll see.
Just means it's allowed to come.
It's allowed to
Just
come.
because you pave a big runway doesn't mean a 747 is going to land there.
True. Good analogy. So, it's the narrative seems to be slowly shifting. I just want Congress to get their act together and put some frameworks around this that the regulators can use that clear it up and give the U.S. a chance to compete in a global level, like they did with the internet. They didn't overregulate it.
Right.
Would love to see that kind of happen here. Not because I have money involved. I just think it's purely a way to allow, entrepreneurs to speculate on growing businesses and stuff. So,
I haven't read much congressional testimony or feedback about what our elected leaders are doing about this, honestly. But my half answer is they're probably still trying to figure it out. What is this exactly? How does this work? And I just picture a bunch of old men and women around this long table with a bunch of 20-year-olds trying to explain to them why this is so important.
I think it was yesterday or the day before. I mean, very recent. There's a committee. There's a million committees up in Washington. These politicians are on it. There's a co-chair. I forget which state this guy's from. He's an older guy. Made the statement. He's like, I just want to make sure, and I'm probably going to paraphrase this wrong a little bit, but I just want to make sure that we have the ability to reverse transactions. That is fundamental to this technology that can't happen.
Right.
And he's the co-chair running, and people are just like, oh my gosh, we have so much education to do here.
Make sure we can reverse transactions.
Yes.
He wants to make sure he gets a refund.
Or somebody steals my money, I want it back.
Right.
I'm like, oh boy, you have a lot to learn, buddy. So yeah, it's still very early, but I don't know. The news in general seems to talk about it more. Maybe because the prices are up a little bit, or
well, yeah, it's sensation.
Yep.
It's also one of the most searched things for on Google at times, which I'm sure is how they're running their headlines. Or if the price falls, obviously it's going to get covered because of it's fear.
Yep.
We got to sell fear. I think the last thing I want to touch on is the whole Colonial Pipeline thing, right? So they pay out this Bitcoin, and what's interesting is they're able to recover it, but it didn't sound like they broke in. If everyone thinks, oh, well, you can't break in and just take stuff, but when you read the reports, it didn't appear that that's what they did.
No, so there was nothing compromised in the Bitcoin network. It was all paid in Bitcoin. This hacker group, which I forget their name, they rented a shared server somewhere in California, I believe.
Okay.
And they had left functionally the private key for the wallet that received that Bitcoin there. And my understanding was that, I don't know, say it was 5 actors as part of this group. They were going to each log in separately and use that private key to send a transaction when they wanted their portion of the Bitcoin. Well, that server being in the U.S., I think the FBI got a search warrant and was able to capture it.
So literally it's like leaving my passwords to everything on Dropbox. And they found the password.
Yeah, or it's like, the analogy I use with someone when I heard about this was like, somebody needed to pay me ransom, so I told him to leave $100 in a brown paper bag underneath the park bench, and my friends and I were going to come by and each take our $20 out.
Right.
It's just a digital form of that is all it is. So.
Okay. Well, I figured it wasn't actually compromised, or else it would have been much more.
The price would have gone to the floor.
But it was funny because the FBI was like, it's super secret how we did this.
Yeah.
And the more I read about it, I was like, I don't think it was that super secret. They were just stupid.
My guess is one of the hackers made a mistake on not covering their trace or their trail when they were coming to log into the servers, would be my guess. So.
Gotcha. Interesting.
Yep.
Well, Robert, always enjoy these conversations. Thanks for coming on and doing this for us and the listeners. And we'll see you next time for the next update.
Yeah, thanks for having me.